Welcome to Majlis and Markets, a podcast where we explore the trends shaping Islamic and global markets. I am your host, Hassan Jivraj. If you enjoy this episode, be sure to like, share, and subscribe. And don't forget to leave us a rating. You can also follow us on LinkedIn and Instagram at Majlis and Markets, or drop me a line at hassan@majlisandmarkets.com. Joining us today is Muneem Salam, Director and Portfolio Manager at US-based Saturna Capital. With years of experience in Islamic investing, he's been a leading voice in the industry. In this episode, we explore the evolution of Islamic finance, the latest investment trends, and where the industry is heading next. Please note that none of our discussion constitutes as financial advice, and if you're seeking financial guidance, please consult a qualified advisor. Muneem Salam, welcome to Majlis and Markets. Great to have you here.
It's a pleasure to be here, Hassan. Thank you for having me.
Muneem, you've got like a really interesting background. I've known you for a couple of years, and I find your views very interesting and very informative. Whenever I'm researching or writing about the Islamic asset management or wealth management space, I always use you as a reference and come to you with like all these kind of questions about Islamic ETFs and Islamic funds. But before we get into all that good stuff, Muneem, could you give our listeners your early life and your background story?
Sure. So I graduated. I grew up in the U.S. Graduated from University of Texas at Austin. Had a double major in economics and government. And then after maybe I think a year or so doing an internship, I got offered back in 1995 to be able to move from Austin to Dallas, which is a little bit, maybe 200 miles north of Austin, to work for a firm that was just starting up, and it was doing Islamic asset management. They had a portfolio that they were working on. So I did that for about 3-4 years. It was a really good experience because at that time also it was very, very new in the market as far as Islamic investments was concerned. Joined Morgan Stanley for about 3-4 years. And then in 2003 is when I joined Saturna, and I've been here now since for about 22 years now. So Saturna, obviously, as you know, manages the Amana mutual funds. So along the way, I've moved to Malaysia for about 7 or 8 years, back from 2012 till about 2018. And now I'm back here, and I'm executive vice president. I'm managing 2 of the portfolios in the Amana funds, the Amana Income Fund, which is our first fund that we launched, and our Developing World Fund. And then I'm deputy portfolio manager on our Amana Growth Fund, which actually happens to be the largest faith-based fund in the country. So
amazing.
In the US.
Amazing. And Muneem, how did you hear about Islamic finance to begin with?
So, when I was in university, I had no idea, and it was really at the point when I was moving to Dallas for the firm, that they told me, well, there's such a thing as Islamic investing, and this is what we do, and those things. And I remember this is before AOFI, this is before Dow Jones, and so we were just kind of like playing around with what would work. At the same time, speaking to scholars about what is an option, what is a stock, what is this, what is that, and really kind of. So I've been had the pleasure and the honor to being able to be very, very early in the industry. To kind of help shape it. It's really been a great experience.
Yeah, it's kind of interesting. You've been like right there, so probably like even before HSBC Armada, maybe, or when it was like being formed. And
it's funny when HSBC Amana started, and people would be like, when we tell people we were the Amana funds, they'd be like, "Oh, HSBC," and then I'd be like, "No, we've been around longer, and we probably will be around longer."
So, Muneem, maybe you could tell our listeners what exactly is Saturna, and what exactly is the Amana Fund?
Sure. Thank you for that. In fact, it's interesting. I have a podcast called Halal Money Matters, and our latest episode, which launched in January, actually interviews the founder of the funds. His name is Dr. Yaqub Mirza. So do check it out. It's Halal Money Matters. So basically the story, and I'll put it up in a nutshell. There was a group of Muslims that were living in the area of Indianapolis, Indiana, and they were wanting to make investments in the market because there was no alternative to a savings account. And so they started, doing their own research and having investment club meetings, but it quickly grew large enough that they said, we need to do something else. And so one of their lawyers introduced them to a gentleman by the name of Nicholas Kaiser, who was running a company called Unified Asset Management at the time. And so, they got together, they formed a friendship, and they decided that they were going to launch this fund for the Muslim community. It took about 2 years, and in 1986, the Amana Income Fund was launched, and that mandate is basically a large cap value, right? Capital. It's the one of the objective of the fund is income, current income, and then capital preservation to kind of keep in mind the savings account part of it that people had. Subsequently, Nick's firm, Unified Asset Management, got bought by a larger company, and so he basically retired and moved back to his hometown of Bellingham. And he was still on the amount of funds, and what happened was that because it was a larger company now running it, they were getting lost as far as large funds are concerned. And so they went back to Nick and they said, Nick, can you run the funds for us again? And he said, okay. So he started Saturna Capital, and the first client was the Amana Income Fund. So over the years, in 1994, we launched the Amana Growth Fund, which is basically capital growth. And go back a little bit. Right now, the asset-wise, the income fund is about 1.9 billion, so about $2 billion. The growth fund is definitely our largest fund with about 5.8 billion or so. And then, we were the marketing of the funds in the 90s was very, very grassroots, literally grassroots, meaning that it's all word of mouth. There was no fee, there was no upfront charges, there was no marketing fee for it, and so it's very, very word of mouth. In 2001, we actually decided to launch or add a fee for marketing, which allowed us to be on the platforms like Fidelity or Vanguard, those type of things, and that really helped quite a bit to do that. I joined in 2003. Assets were about 40 million in size, if you can imagine, just for the funds themselves. And then I think basically the kind of growth has been led by three different factors, right? One is performance, because if you don't have performance, nobody's going to buy you. The other one is marketing, right? So if nobody knows about you, nobody's going to buy you. And the third one is basically having a distribution channel. So a person can come directly to us, or they can go to any of the larger firms or the advisory firms to be able to buy our product. So all three kind of came together in the 2000s, and so that really helped our growth. I mean, we grew from 40 million in 2003 when I joined to about $1 billion in 2007, and it was just upwards from there. So in 2009 we launched the Developing World Fund, just to kind of balance out the kind of international markets versus in the U.S. market. And then in 2015, we launched a Sukuk fund, and we called it the Amana Participation. So Developing World's about 135 million or so in assets, and then the Sukuk fund is about 220 million in assets. So Saturna Capital now is the investment advisor. We're the ones who manage it. We do the fund accounting, the distribution, all of those things. And we also have, for the Muslim community, we have wealth management. We have a retirement division that does, 401ks, which are the pension plans for the U.S., 401ks and other things like that as well.
Amazing. And Muneem, what's it like running a Islamic asset management company or fund in the US? I'm sure it's not an easy job, but it could be quite interesting from the sounds of it.
It is interesting. I mean, I think one of the things that happens is, I mean, there's multiple different kind of audiences, if you want to call it, right? We have one audience in the Muslim community, which is basically like, even after like now being here for 35 years, because the community is changing so much with the influx of refugees or people coming in, that type of thing, that we're always meeting people that have never heard of our funds. So it's really great to be able to introduce them to it, talk to them about Islamic investing, wide support, and those type of things. And the other group of people that have been with us for a long time, they usually come up to us, and this is kind of like what makes my day or what makes my month is when they thank me for providing the service, because they were able to buy a house with their money, they were able to pay for their education of the children, all of those things. That's really a highlight of my day. And then on the second side of it, the advisory channel, right? The advisory channel is basically where it's just conventional advisors that are looking to be able to find good funds, not only for their Muslim clients, but they're just for their non-Muslim clients as well. And so it really is, it's an education. It's always about education, but it's education that leads us back to our funds.
Amazing. And Muneem, before we get into the specifics of Islamic asset and wealth management, you said also you worked in Malaysia.
Yeah.
I think you said 2012 to 2018, if I'm correct.
correct.
That very interesting time to be in Malaysia at that time.
Yeah.
And maybe you could tell us, like, what was it like working in Malaysia? You were still with Satana at the time when you
I
were.
was. So we basically opened up our office in Malaysia. We got started by purchasing a fund manager in 2010. So what we did was we basically took a conventional fund manager and we converted the license to an Islamic fund management license. And so it was one of the first ones that was done. It was a really great time. I mean, MIFC, which is the Malaysia International Finance Islamic Financial Center, that was basically coming to fruition. There were new asset managers coming in, Islamic banks coming in, and so it was a really great time. The Malaysian ecosystem for Islamic finance is so much more developed from my perspective than any other place in the world. And so not only do you have the regulators, but you have the industry practitioners and you have the education pipeline to be able to kind of graduate with not only degrees in Islamic finance, but then also if you wanted in the Sharia, all of those things. So it was really great to be able to be part of it. I think I benefited a lot from being there, and hopefully they benefited from me as well. While I was there, I was able to author a couple of chapters in some textbooks for students. When the Securities Commission came out with theirs, but it was a really, really good time. But one of the things that's important to remember is a lot of the Islamic fund managers that are in Malaysia, a lot of them are subsidiaries of conventional managers. There's very, very few of us that are basically have a pure Islamic fund management license and no other conventional license. Now, I can probably say it's ourselves and maybe Bank Islam might be another one. Maybe there might be some more now, but that was also a fairly unique time as well for us to be able to navigate through things like that. Because what happens is that, and I don't want to go on forever, but just one more thing that I wanted to add. What happens is a lot of the institutions and also the advisors like Mercer and Towers and all these other ones, when they're looking at assets under management to be able to see how you perform or how you do, they look at your entire assets under management, not only the Islamic side, right? So if you look at that, then obviously a company like Amundi or BNP or others might be a lot bigger than we are. But if you're looking purely on the Islamic asset side, we're the biggest. And so it was constantly a kind of a discussion about, what do you want to focus on? If you're looking at Islamic mandate, then look at the Islamic assets. Don't look at the entire firm, or and then those things as well. So that was an interesting time as well.
Speaking of Islamic assets, Muneem, to somebody who's not too familiar with Islamic finance or asset management for that matter, how would you define Islamic asset management, and how would you say it's different from the conventional asset and wealth management?
Sure. So, I mean, I think all of Islamic asset management starts with the screening, right, of the stocks and the portfolios themselves. And that one, just very briefly, anything that's against the Sharia is going to be not allowed to invest in, and that's on the business side. So, no alcohol, tobacco, gambling, pornography, and the largest industry relative to the conventional is going to be no financial instruments. No financial services companies, no banks, no insurance, those type of things. So that's kind of the largest one. And then you have secondary filters that basically try to eliminate or reduce a company's exposure to anything that would be haram. So that comes in the form of debt, that comes in the form of cash and accounts receivables, and that comes in the form of any ancillary income that they might have from something haram. And I'm being very, very general, so there's a lot of information out there that people can go after to read up on it. So that's kind of the general idea. Then what from there, that's from the stock screening side. Then you have the fund management side, which would be basically now how do you develop a portfolio that's actually in line with Islamic values. And how do you make it so that even though you don't have financials, you don't have kind of large industries that are in there, how do you keep it from either not underperforming the conventional benchmarks that are out there? That's kind of the idea for doing that.
Would you similar to like ethical or ESG investing?
I think it's similar to ethical and ESG. Again, the biggest part of the ethical and ESG spaces, they still will allow financial services, right? Financial services is something that the not allowing of that is very unique to Islamic fund management, and that's the big thing that you have to constantly remind people. There's a lot of synergies, but there's a huge area where there's no way there's any compromise on what we can do.
So if we take it down, right, like a skeptic would say, well, it depends on whose standard you're following and which jurisdiction you're in. I mean, it's not uniform across the board, right? It differs
Yeah.
in markets.
Yeah, I mean, I have a different opinion when it comes to that. So kind of let me just share it with you. The first of all, yes, the differences are there, but nobody's going to argue with you that alcohol is not allowed.
Mm.
Nobody's going to argue with you that financial services are allowed. What they're arguing with you on is basically the financial screens that are there, right? And in the financial screens, there's a couple of things you have to talk about. Number one is, first of all, well, in generally when you talk to scholars, they're like, especially in the modern age, they're like ikhtilaf, which is differences are encouraged, right? But now when you come to Islamic finance, all of a sudden you don't want to have ikhtilaf. That doesn't make any sense. I mean, obviously Malaysia will be different than Middle East will be different than somewhere else. They have different tax jurisdictions. They have different, scholars, all of those things. They're different schools of thought as well. All of those things are there. That being said, however, if you kind of drill down a little bit deeper into the financial ratios, you're not going to find a difference between it's on the margin that the differences are there. So, for example, you might have total debt to assets versus total debt to market cap. It might be 30 versus 33, right? And those are minor. 3%, if you're looking at total debt to market cap, is a very minor difference. You can easily build a portfolio for the client, however they want to do it based on their Sharia scholars that are there. The other thing they want to keep in mind is, what are we trying to do when we say total debt to assets or total debt to market cap? What we're trying to say is, how much debt does a company have relative to how much it's worth? And if it's less than 33%, it's allowed, right? Now, even in conventional finance, there's a debate on how do you value a company? Is it enterprise value? Is it on total assets? Is it market capitalization? All of those things. So if even conventional finance has a disagreement on how you value a company, then obviously that's going to translate into the Islamic side as well. So what is the true value of a company? And that's where the differences come in. Other than that, all the other ones are very minor.
And would you say most asset managers in the equity space use AOFI as the standard for their screening process?
No, I don't. I think there are certain areas in the world that they actually do, but there's a lot of places where AOFI is not the accepted standard for that. So, I mean, I think if you're trying to go cross jurisdictional and do that, then I think AOFI stands to you can use those guidelines. All right, but I think that a lot of them don't. A lot of them use their own indices as their guidelines. So, for example, there might be an institution that has I'm just making this a FTSE or S&P as their benchmark, Islamic, and so they'll use their guidelines to be able to kind of do it, or MSCI or those type of things. And so for those people that say that AOFI is the standard, no matter, I mean, I have a lot of respect for AOFI, and they've done a lot of work on different areas, but in the Islamic investment management space, it's been stale, right? They came up with a standard back in the 2000s. It's pretty much the same standard it is now. And so, as we've kind of, gone into Islam, from my perspective, Islamic investing 2.0, they're still their guidelines are still a little bit older from that perspective. And then the other part of it is that a lot of, like, Dow Jones, when they came up with their standards, was a few years before AOFI. And then you can say that about our standards came about 15 years before AOFI. So we have a lot of history behind the standards that we use.
How difficult is it to actually screen this? I mean, if, say, for example, I wanted to screen it, would it be difficult for someone who's not as like a financially literate person to screen these kind of stocks?
The screening is not the big issue when it comes to stocks, right? There's all of the information that you're looking for in the screens is going to be, I shouldn't say all, the vast majority of it is public information, right? So total debt, company has to report. Market cap or assets, either you can find it on Yahoo Finance or Google or something like that, or it's reported. Accounts receivables, same thing. Everything that you're looking for is going to be reported. The only thing that doesn't get reported is the interest income, right? And that's the only one you have to kind of massage the numbers a little bit to be able to tease out from the financial statements what exactly that number is. So that's one of the areas. But other than that, it's pretty straightforward as to being the screen. Now, when you get from a conventional, you screen out for halal and you have halal stocks, the trick comes in is that saying that not everything that is halal is good for you, right? And so how do you get from halal stocks to a basket of securities that are actually going to be able to do well over the next 5, 10, 15 years?
That's very interesting. Yeah, I think when we spoke a couple of weeks ago about when I was writing this article about Islamic ETFs,
Yeah.
There's been a lot of news in the past couple of days about this new State Street Saudi ETF, and there's been a lot of pouring into ETFs. And just with the ETFs as well, I think there's like a limit. I remember when we spoke on the phone, you were telling me that there's a very limited supply of these kind of Islamic products. Would you say
Yeah.
that's still the same today?
Yeah, that is the case. I mean, I think that if you look at funds themselves, however large the industry is, the vast majority of it is in Muraba, is basically Muraba, commodity Muraba funds, right? Alternatives to cash or those type of things. So when you get into the spaces of like actual equities or actual sukuk and stuff like that, it's a much more smaller market. Liquidity is not there, those type of things, and part of it is like, let's be honest with each other. I mean, a lot of the sovereign wealth funds around the world, they are not Islamic. I mean, they might be ethical, or they might be this, or they call themselves whatever they are, but they're not following Islamic guidelines. And so, when that door opens up for in the future, and inshallah it will, I think there's going to be a huge amount of liquidity in the market.
Why do you think a lot of these sovereign wealth funds, like even if we take the PIF in Saudi Arabia, or we take the Kuwait Investment Authority, or any of these kind of guys, even Mubadala, for example, they don't really seem to be too fixated on Islamic finance or Islamic investing?
Yeah, it's hard. I've never worked there, so hard for me to speak on their behalf. You know what? I think that if I think what fund manager look. I mean, if you're like, let's supposing $1 trillion fund, or even more than that, I think it's more a matter of being able to pick managers and able to pick instruments and investment vehicles, and also the investments themselves, that are going to be large enough to invest in, right? Liquid enough to be able to sell. So there are criteria that are there for larger sovereign wealth funds that are not there for individual investors, right? So, like for example, if you look at something with a large fund with let's say a 500 billion, I'm just making up the number. Let's say 500 billion, and they're trying to allocate, or you're trying to raise money from them for 50 million. I mean, that's nothing for them. That's a waste of their time. They need to go into investments that are 500 million, maybe a billion in size, and sometimes the market's just not there yet to be able to do that. So that's the one part of it. The other part of it, more pessimistic view that I'll give you the other side of it, is that for a long time, for example, Saudi Arabia didn't even have a sukuk offering, right? They were just doing conventional bonds. If anything, they were doing conventional. And the pessimistic view, that the kind of word on the street was, if they ever said that they were going to do a sukuk, then it would mean everything else that they're doing is haram, right? So it was one of those kind of battles that they were having. But I don't think that was the case. But that there are some perceptions like that in the market.
Why? Just by extension, also, I remember talking to a lawyer a few years ago, and it seems to me that these big asset managers, especially the ones in the US, like your Vanguards, your BlackRocks, they haven't really they have a few ETF offerings, let's say for example, but they haven't got like a fully fledged dedicated Sharia funds. I mean, like you've just said, right, the size is not that big, but for the likes of BlackRock, it's not that big of a deal for them to put $100 million fund together to serve these people. Why do you think they haven't taken, or not specifically BlackRock, but like other funds? Why do you think they haven't
So
taken?
that's a really good question. So I think the answer that lies in a conversation that what I had with one of these firms, right? And they said, look, the market is not big enough for us to focus on, but it's small. But it is big enough to have something there and just leave it on the shelf, right? And so we were kind of stuck in the kind of limbo phase of, like for example, if you take the MSCI shares, they're probably about 200, 300 million in size, so it's pretty decent from an Islamic finance perspective. But the whole balance sheet, or all the funds that BlackRock manages, is close to like 7 trillion. So if you look at it relative to that, it's big enough that they were like, okay, we'll do something there, but it's not big enough that they'll say we'll double down on it and make it grow even further, right? At the end of the day, no matter how much people look at it, this is still a niche industry, especially when you're looking at it from the Western perspective, right? For US, UK, Europe, that type. It's a niche industry, and so to be able to have larger companies come in and play in the space, it's going to be very difficult. One of the larger banks that's there, that was playing in the field, and they kind of retracted. They basically were like, well, so we're making about $100 million of profit a year in Islamic finance, right? That seems like a lot of money, and for a niche market player. But if they're making $1 billion a quarter in profit, I mean, their fines are going to be more than $100 million if something goes wrong. So their risk to reward ratio is just not there for them to do it, right? for them to kind of be that. And then also the last thing that I want to mention is I think this is going to be controversial, but I'll say it anyway. I think there's a colonial mentality that we have to get the larger Western banks involved for us to legitimize ourselves. That is not the case, right? We have really great products. We have products that actually do outperform, and we shouldn't be looking for recognition from the larger players. Let's just do what we need to do and get it done.
One of the things that came to my mind just now was if we take the UK, for example, Islamic finance has a very well established history for a long time, 30, 40 years it's been here. But Munim, if I'm being very honest with you, like a lot of people distrust Islamic finance. There's this trust issue, the cost issue is a big thing. Would you say that's a similar story in America, where the customers don't trust Islamic finance as much as the UK?
Not as much as the UK is. I think UK has had some missteps along the way, and I think that history has not replicated itself here in the US. I mean, there are people obviously that are going to be forever pessimists and those type of things, but I definitely feel this is a growing market in the US. Because the UK is much more developed, you're seeing a lot more, for example, fintech startups, and the ecosystem is much better developed in the UK than it is in the US. But I do think the skeptics are more in the UK than they are in the US.
What's also interesting is if you look at the socio-demographics of Muslims in the UK to the US, I find that American Muslims are a lot more integrated, a lot more active in financial markets than they are probably, say, in the UK. And like you said, right? It's not the US Muslims don't have that baggage of Islamic finance, whereas the UK, it's had like a lot of like controversies over the years.
Yeah, but also remember for a long time, when you say UK has a history of Islamic finance, it's true, but that history of Islamic finance was all with eyes towards the Middle East. It was never something that was organically done in the retail market in UK for UK residents, there. So it's a little bit of a different aspect than in the US. In the US, majority of the companies that came out were all focused on US investors. Whereas in the UK, the companies, the banks, and other things that were there, they were all focused on Qatar or Saudi Arabia or the Middle Eastern markets because that's where the money was. And so, when Islamic Bank of Britain started back in the 2000s, I think probably that was one of the first that was there, and they've had missteps along the way. And so, that's why I think you have a much more sour taste in people's mouth in the UK.
One of the things that's also interesting, Naeem, is that I was reading an article yesterday in the Financial Times about active ETF funds, which are being launched. They're becoming a big thing in the US and in Europe as well. But when you look at the Islamic ETF space, I mean, we've been talking about it for a bit just now. I know you guys have the Al Kauthar. Well, maybe you can tell our listeners about the Al Kauthar ETF.
Yeah, so Saturn Al Kauthar Global Focused Fund basically is listed in London and also trades in Germany and Switzerland. Basically, it's an Islamic fund. We actually ended up we didn't launch the fund. There's a company or a fund manufacturer named Han ETF that already had a fund on their platform that was Islamic, and the fund managers was going to pull out. And so they approached us and said, do you want to take it over and kind of run with it? And that's what we did. And so we took over the fund in 2022. And we've been running it for now roughly about 3 years now. It's done really well after the first initial misstep, which wasn't really a misstep, but the fund is also a sustainable fund, and so we don't have fossil fuel extraction companies. And so in November we launched, we took over the fund, and in February was when the Ukraine war broke out, and so oil prices went through the roof, and they did really well. So that was a little bit of a drag for us. But the fund is available to individual investors around Europe and also in UK as well.
Munim, I was on a WhatsApp group a few weeks ago and talking about ETFs because I wanted to just ask people, normal Muslims, about people who aren't involved in financial services, about their investments. And I asked them about Sharia compliant ETFs for that article I was writing when I talked to you about. Yeah. And a lot of them were saying we don't trust these ETFs. They may be Islamic in name, but a lot of them are connected, let's say, to nefarious players in the world, or they're connected to things we don't necessarily agree with. Do you think there's some challenges there, like with trust with these kind of products?
That's an interesting job. I mean, I have many thoughts on that. I mean, the one thing that to me, it's a lack of understanding, right? I mean, for me, it's more a matter of the difference between halal and haram. and then what's ahsan versus or mubah, right? Let's kind of translate it. Difference between what's permissible and not, and that, and then within the realm of halal, what is okay and what is recommended, right? These ETFs are not they're not haram. They're within the halal. You can say they're mubah, permissible. They might not be ahsan because of who their backers are and those type of things. But one time somebody told me, look, when we're talking about sustainability versus all of these other factors, and then looking at Islamic, and I said, why? And then somebody asked the question, why haven't the idea of Islamic sustainable funds or other things grown in size? She said, people are still trying to get out of hellfire and get into Jannah. Once we get into Jannah, then we can talk about the other stuff that's there that we want to get into. And so the difference between owning a conventional fund versus an Islamic, no matter who's the one sponsoring it, it's very similar to that. You're talking the difference between haram and halal, right? Once you have that mass of people in halal, then let's talk about the other stuff that needs to go into it, like sustainability or BDS or whatever it is you want to talk about.
You think like things like a Tayyib fund? I remember having a conversation with a fund manager here in London a few weeks ago, and he's trying to really launch what's called Tayyib funds, like a more wholesome fund. So if you take it from, like, say, for example, from farm to fork, so what may show up on his Islamic screener as halal, like, say, let's take, he used a Chinese manufacturing company which used children to manufacture their clothes, although on the screen they may appear halal.
Yeah.
In terms of their activities, they were not halal or not Tayyib, let's say. Yeah. What do you think of this thesis?
I mean, I think, look, if there's a market out for it, go ahead and do, because definitely it's something good that you're doing, right? I mean, nobody wants to be involved with child labor and own a company that's involved with child labor. Let's be honest. However, the balance comes in to find it. Can you find enough companies to invest in that have the Islamic screening and also at the same time have all the different criteria that you have set up? And then the criteria becomes a value judgment. Right. So, for example, is a company, for example, a construction company in the Middle East who has slave labor or servitude labor, different than a company that does in China that does something similar or does child labor? How do you balance the two? Because a lot of these investments will have to make a value judgment between one versus another. And so, I don't think it's the idea of doing it from a fund manager perspective. Right, it has to be really the fund owner that has to really set out the criteria for what it is we want to be able to do. So, for example, if you're going after a large institution, let them set up what the criteria is, rather than you're trying to manage for them what it is, because it's going to be different for different institutions in different parts of the world.
What about Sukuk? Like, you talked about how you guys launched your Sukuk fund in 2015. And really, from my perspective, Sukuk really probably took off into that a year later, 2016, 17, with the GCC countries beginning to issue. I mean, from a Sukuk perspective, for retail investors, it's very difficult to buy Sukuk, right?
Correct. Yeah, it's just a size issue. And that would be the case in regular fixed income as well. A retail investor usually cannot buy just a corporate bond.
That's true. And then, like, would you say, like, from a fund manager's perspective, you analyze Sukuk in the same way as you would a conventional bond?
Yeah, our analysts are looking at it from looking at their balance sheet, what's credit, what's liability, are they going to be able to pay off the liabilities? All of that stuff is done exactly. Well, I don't say exactly, but very similar to how a conventional bond is looked at, right? But then we also look at the Sharia aspect of it as well, who the Sharia board is, have they given a fatwa? All of those things have to come into play as well.
And this new AOF standard, which I'm sure you've been reading up on and hopefully heard my podcast with Omar Ansari on the previous episode, was this new Sharia standard which is coming in, which could potentially alter the credit risk of Sukuk, transferring it from asset-based to asset-backed. Do you have any, like, preliminary thoughts on what it could mean in terms of, like, your risk appetites?
Well, so I mean, I think that yes, the risk is going to go up, obviously, because you are going to be tying it to an asset. But I will say, look, having a little bit more of a historical perspective, the idea for the Sharia scholars to allow certain things was there not indefinitely; it was there for a temporary period of time. And now that time is beginning to expire, and the reason why is because we became a little bit more complacent as to how long this timeline was going to last. And so, yes, it might be disruptive to the market, but at any disruption, there's opportunity. And those that jump on this will have the opportunity, they will succeed. And so, people will complain, and there will be people who or companies that might not be able to stay in the market or not be able to do well in the market. But there are going to be enough players out there to be able to take it because the demand is there, and that's the kind of the biggest part of it.
But Munim, for example, say an issuer with a similar credit rating to a conventional bond issues a sukuk under this new standard, you would be taking on a lot more, like, say, project risk or the actual underlying risk of the asset. It wouldn't be the same in terms of a credit, right? You'd be
Yes.
demanding a higher return.
Fine, but let's not look at it from why do we need to always compare to a conventional bond? That's really the question, right? I mean, yes, if you are a conventional fund manager, yes, you would look at it and say, what is this sukuk? Oh, it's similar to a bond. Okay, I'll buy it, right? But from an Islamic perspective, there has to be a difference, or what is the point in doing it? And so, yes, the risk will be there, but from an Islamic perspective, we need to have that risk and reward. I mean, that is a big part of our main focus of whenever we're making Islamic investments. So, like I said, look, I'm not saying it's not going to cause controversy or it's not going to be, but in every kind of a disruption, there is opportunity and players do emerge.
Do you think the answer then for that is to have more OCAF and more deeper pocketed funds to buy this kind of paper?
Absolutely. Look, in any market, you need liquidity. Any market, you need demand. So it's OCAF. Ideally, it would be the sovereign wealth funds. Definitely pension funds that are there. For example, in the Southeast Asia, all of these players need to be able to step up and say, oh, "We'll make a commitment to doing that." And I think everything will flow from there.
With regards to things like ETFs, sukuk funds, mutual funds, all of these kind of Islamic products that you guys offer, the big question of other than authenticity is cost. Us Muslims, we always look at cost.
Yeah.
How would you say Islamic asset management in terms of a cost compares to the conventional?
I mean, generally speaking, I would say because on the cost basis, every market is different, right? So, for example, in the U.S., fees are much more of a something people look at more than, let's say, Malaysia or some other place. So, cost is jurisdictionally based. So that's one thing. But the other thing I would say is in the jurisdiction that you're operating in, I think cost really is not a factor, right? I think we're competitive, right? For like to like. What the problem happens in the retail side is people begin to compare apples to oranges, right? So, for example, they'll take a conventional S&P 500 fund and they'll say, "Oh, wow, this conventional S&P 500 fund has a 0 expense ratio or has a 0.05, 5 basis points expense ratio. Why is your fund, so much more, 50 basis points or 75, whatever it is?" Well, you have to know the differences between the two, right? Number one, we're active managers. That means we're trying to pick the best of the best, right? I mean, the idea is that we're struggling to be able to make something better, which is what is encouraged in Islam. Number one. Number two is that conventional funds are able to do things that Islamic funds are not. They can lend, they can do securities lending. They can take their cash and they can put it into, money market funds or something to be able to draw off of that. All of these things that can happen in a conventional fund that might be able to reduce cost is not going to be there in the Islamic space. And the last one, which is important, is that, as assets go up in a fund, usually fund expenses come down, right? It's just the nature of how funds work. And so you cannot compare a fund with a $500 billion in size to a fund that has, like, say, $500 million and say, why is your cost not the same? Great. Give me $500 billion. I'll make the cost exactly the same.
As we bring the podcast to a close shortly, Munim, there's just two questions that came to my head. The first is, what are your thoughts on this argument that active asset management doesn't beat passive? I think there was a study done a couple of years ago that if you compare over 7 years, active and passive don't really beat each other. I mean, you obviously being an active investment manager would obviously advocate for some active management. What do you have any thoughts on the passive management side?
Yeah, I do actually. So, I mean, active management versus passive, you have to look at it more holistically. So there's a couple of things you want to look at. Number one is that risk to reward, right? So yes, active management might not be able to outperform on the upside, but looking at our funds, for example, and how we're able to outperform on the downside, we are able to mitigate risk more than the passive side has, right? The other part of it is the fact that, look, we have been going through one of the greatest bull markets that's been in the history of the world, right? And so, if you want to say yes, the active ones have missed out, maybe, But if you look at it on a risk to reward basis, we haven't missed out. And so, nobody ever talks about, for example, in 2022, when the markets were down quite considerably, S&P was down close to 19%, right? Our income fund was only down 6%, right? That's a significant outperformance if you think about it from that perspective. And so for us, it's not only about, participating in the upside, but it's also protecting on the downside.
And my second question, Muneem, was how do we encourage people to become more educated on these Islamic products and Islamic finance in general?
And look, I think that's happening anyway, right? I think podcasts like yours, like the one we do, Halal Money Matters, there's more material out there that's there. So I think generally speaking, it's happening, right? But I do think that from a retail perspective, I think it's important for us to be able to focus a little bit more on the scholar side to be able to promote this a lot more. So, for example, you'll have a lot of Sharia scholars that might go up and they give khutbas, but then when they give the khutbas, they're talking about spirituality or something else. They don't really talk about this idea of, that where you're getting your income, where you're investing your money has a lot to do with whether or not, for example, your prayer will be answered or not. Or, all of this. So really, really some very serious Quranic ayahs and hadith that need to be expounded upon a lot more. I don't think it's done enough in the general Muslim community. I think that is one area where I think more focus needs to be.
Well, why is that, do you think? Why do you think that is?
That's a great question. I don't know. Really, I don't.
Do you think it differs between, like, say, Bengalis and Pakistanis and, say, Middle Easterners and
Well, I mean, so one thing is that I will say is that, when most, and I'll be general here, but when you're going through, your study in Islamic studies, you're talking about hadith, you're talking about Quran, you're talking about spirituality, how to pray, how to fast, but the muamalat side, which is the interactions and the business side of it, is very, very low in how, number one, how much time you spend on it, but B, is on the education level of the scholars that are there. And so you can only talk about things that that you know about, right? And so I think that's one of the reasons why I could say that's the
Yeah,
case.
what's interesting is that Surah Al-Baqarah, which is the longest chapter in the Quran, talks a
Yeah.
lot about riba and talks a lot
Yes.
about trade and things, and it's just interesting that people don't really. I was talking to a friend of mine the other day who works in an Islamic bank in the UAE, and he was saying to me, we've normalized riba, and yeah, it's unfortunately we don't really educate ourselves in this.
Yeah, and also it's not only about the riba aspect; it's the gharar. It's when you're writing a contract, you write it down, you make it clear. I mean, the longest ayah in the Quran is based on just basically a contract for a loan, right? I mean, that's what it is, and so it's definitely. I mean, riba is a huge component of it, but let's not forget about the other aspects as well.
Very true. Muneem, tell us any projects you may be working on, any upcoming projects you may be working on.
Well, I mean, I think that we're really beginning to focus now as a community grows and become wealthier. Really, I think wealth management is an area that we're focusing on, Islamic wealth management, and that really means is that looking at holistically a client's portfolio, not in fund at a time, but actually on an asset allocation model, and to be able to say where it incorporates financial planning. So, what is it that you want to do, what the goals are, and then trying to build around that, but offer products that are going to be halal for you to be able to get there. But then also at the same time, I do feel there are maybe some holes in your asset allocation model. So we have sukuk, we have equity, we have international equity, right? But maybe real estate isn't represented, or alternative asset classes like maybe commodities and others aren't represented. So how do you kind of incorporate that into a model? So we're really looking more deeper into that aspect of it. And then also really focusing on, at least in the US, and I know this happens in the UK as well, the pension system right now is not set up for ease for Muslims to invest. And so how do we break that barrier? And that's from the bottom up, which is getting retail demand to speak to these institutions, but also top down from the government perspective and pushing this idea of, look, we need to have alternatives for those that don't want the conventional side.
Amazing. And Muneem, how can people find out more about Saturna?
Very easy, actually. If you go to saturna.com, if you're in the US, if you're in Malaysia, it's saturna.com.my, and my, .my. And then, or if you can just Google Amana Mutual Funds, you should be able to find us and see our performance and what we've been doing for the past 35 years.
And are you guys active on social media?
Not as much as as other people are, just because of the regulations that are around social media. So I think the best way to reach us was going to be from our website or giving us a direct call.
Okay, so TikTok is still around. I'm hoping in America that people can.
Yeah. Yeah. I mean, people don't realize how much regulation there is around Instagram, TikTok, and those things for as a financial institution. And so it's very difficult to navigate, and a lot of institutions have just stayed away from it.
And are you active yourself on social media? Like maybe the first.
I am not active. Or maybe on LinkedIn, and that you can find me on LinkedIn.
Okay,
So people can do that. Otherwise, again, the same regulations apply to me as well.
that's fair enough. I'll put the show note in the show notes. I'll put Satana's details in there. But
Thank
Munim,
you.
this has been like a really fantastic conversation, and I wish you all the best. Well, for going into 2025, that we're now at the end of January, coming towards.
Thank you so much. Always a pleasure talking to us, and I really appreciate the time.